Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 1.5% there. On the S&P's Nasdaq, 2.1%. Semiconductor made a move today, close to 5%. Dow 1, Russell 2000, 2.3. Transport, banks, these guys are up about 1.5%. Energy made a move along with the biotech. Healthcare, home builders, retail, emerging market, all these guys are green today. Utility is the only sector with a red number. Bitcoin is up quite a bit. Gold, silver, miners are green. A dollar flat. Oil up. Treasury bond down. VIX is down a little bit. Let's look at S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed yesterday. And looks like we opened up right here. So we actually did see that gap up this morning. Thankfully, that gap has been sustained. It is still open. Bulls were able to protect it. And looks like we did rally all throughout the day today. And that is something that I've been talking about. I've been harping on. I've been emphasizing on the last couple of days that bulls need to see strength after a base like this right here, right? So now that we have that up gap open, we're back above my micro-term moving average and my short-term moving averages, right? So you can see that my micro-term is rising now and my short-term, right? Looks like my mid-term is slightly flattening out, and that's what the bulls wanted to see. So as of today, sentiment is bullish in the short-term and the micro-term, while I have to say the midterm still bearish to possibly neutral, but mostly bearish. So 390 is a level that market decided that is going to be a resistance. But you can see here, as I adjust this just a little bit, I'm just tightening this a little bit. And this is a level where we hung around back in early June and then all throughout late June right here. And we're back at this level. Definitely that 389 level is the level of interest, right? Prior resistance or prior support could potentially, or prior resistance could potentially be a new resistance here. Or are the buyers gonna finally break out above it? Because last time, right here in late June, when bulls did get up, right here, I'm gonna do this here. You can see it. Bulls found quite a bit of momentum right here, as you can see, for about 2 weeks or so. And when we got to this level, bears, especially the boss bears, came down with that midterm moving average. They marched down and shot the buyers down. You can see how quickly things got nasty for a couple days. And bulls kind of regrouped here a little bit, right? They didn't let the price come all the way down, making lower low. Instead, we got the potentially what it looks like higher low. We based out. We're back at this level at 389. There are a few things that are looking a little bit more positive than back in late June. First of all, when late June happened, there's this huge down gap, right? That means that's a double resistance. Not only bears or the buyers had to deal with that down gap, there was also this midterm moving average coming down. So buyers had to battle with the down gap resistance and the midterm moving average when the boss bears are coming down hard. And so you can see we did see that tankage for a couple of days. Today, midterm moving average is here. There's no known down gap at this level. We just got this 389 pivot. There's a down gap at 400 though. So this is the next target for the buyers. If the buyers want to sustain and survive the month of July, they must get above 390 here, this pivot, and go after filling this down gap at 400, right? Should there be any kind of decline going into tomorrow and early next week, as you can see, 385, 383 is gonna be that micro and the short-term support. it will be better for the buyers if they can keep this gap open. We do have a micro-term moving average at 385 supporting the buyers. We did see a little bit of dip yesterday. As you can see, the short-term and the micro-term and the mid-term, they all act as support right here. And that same micro-term and the short-term, these guys are hovering in this vicinity, 385, 383, to protect that level. So we do have a pretty decent support at 385, 381 because of the gap and the short-term and the micro-term moving averages. So any kind of decline, that's the level of interest for potentially being a support. I want to quickly look at the NASDAQ here really quick because this is a NASDAQ. The Qs here, NASDAQ is at a crucial level. As you can see, this is a level. So NASDAQ actually got to this level where this gap area is happening. Right on the spider, as you can see here, we're still up in that down gap, right? That happened early June. We're not near to that level. So the NASDAQ, however, we're just right on that level. And last time when bulls faced that down gap, we did see that tankage. So bulls are trying one more time. I'm gonna tell you right now that either this gap gets filled, right? Bulls get up and fill this gap as quickly as possible, or the best case scenario for the buyers is gapping it over. However, if this gap doesn't get filled, you should expect another tankage to 277. This is a very, very strong resistance because this down gap's been open for about a month or so, and last time bulls failed miserably. So bulls understand and remember this level. They're fearful of this level. They gotta act quickly. Let's check out that oscillator and see if we can extract any more information on that oscillator. Are we overbought yet? We're getting to that level. We got just, if bulls really want to push it, they just have a little bit more energy left to push it. That means they have a one more day to possibly break above that 390 level, potentially on the NASDAQ. They might have a little bit of energy left to even go up and fill this gap and gap it over. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and go trading tomorrow.